So I think this is what the 5-minute chart will be doing today. Right, this is the 60-minute chart last week prior to the breakout. And the 5-minute chart to me looks like this: big down, big up, big down. So if 7 closes on its high, it is an okay swing buy for a possible low of the day, despite how strong 4, 5, and 6 are. If you want higher probability, you have to wait for the reversal up, wait for several bars. But if it closes on its high tick, it's a reasonable high of the day. This is comparable to bar 6 yesterday. I mentioned at the time that the big tail on the top of the bar lowered the probability that it would be a reliable low. If this bar closes on its high, it is a higher probability that it is the low of the day. Risk is very big, stop is very far, right? So, okay. Pretty good bar. We're back, it closed back above the 1 low. I think it's a pretty good statement on the part of the bulls that they are willing to buy. But if you buy, your stop is very, very far below. So you have to trade very small. Can you sell below 7? Is it like 69 yesterday? The context is different, right? There we were in a small pullback bull and small pullback bear and endless pullback. We had a failed wedge bull flag. Here we had a sell climax, big move up, big move down. So this is a swing buy for a possible low of the day. And it is a reasonable buy if you can trade small. If it is the low of the day, we'll get a rally, some kind of rally. And once we see the rally, the probability for the bulls will go up. All right. So if you don't have the ability to trade very small here, or if you don't like the probability, you can wait until the market becomes always in long, which it is not yet. I think this is going to trigger, and we'll see if we race up or if we hesitate. Trading range start to the day, so chances are the bulls will be disappointed, just like the bears are disappointed by this reversal bar, especially in this context. For the bears, 8 is a pullback, or 7 is a pullback from the breakout below the low of the day, bar 1. So it's a breakout pullback short below 8 or below 7. Low probability short, but we're in a very big bear trend on the 5-minute chart, the 60-minute chart, and the daily chart. I think the odds are that we'll get a rally rather than continued selling. But because we're in a bear trend on the 60-minute and daily charts, selling for any reason at any time is okay. Problem is stop placement, right? 60-minute chart, stop is above the top of the most recent bear breakout. Daily chart, stop is way up here, above the top of the most recent bear breakout, which is way up here. Can traders buy above 7 and put a stop below 8, even before 8 closes? There's probably a smaller time frame, like a 2 or 3 minute chart, higher low there, right? They probably can. But technically the stop goes below 6. And even if we fall below 6, I think there'll be buyers down there, and the bulls will try to get a wedge bull flag. Like yesterday, we had a wedge bottom. So even if we get down here, I think the bulls will try to create a wedge bottom. If you're a bear, do you want to short below 8? To me, it's a low probability trade, right? We're in a bear trend, right? A broad bear channel, so it's a reasonable thing to do, but I think the probability is that it will lose money. So you can be swinging a short, stop above 3 or 4. You can be swinging a long, stop below 7, maybe below 8. But even if we get below 7, I think the market will reverse up and form a wedge bull flag. Market's deciding whether this is the low of the day or if we need one more push down to a wedge. 7 is strong enough, 1 is strong enough, 8 is strong enough, so that this might end up as the low of the day or the low of the next 2 or 3 hours. For the bears, this is a pullback from the breakout below the low of the day, a breakout pullback short with 3 consecutive bull bars. It could be like 1, 2, 3, 3 consecutive bull bars and a big sellout. But to me, it looks like trading range type of price action, and probably bulls will start buying below lows, maybe below the 9 low, maybe below the 7 low. The issue is whether or not this 2 legs down is enough for the low of the day, or will the market need a 3rd push down to a wedge bottom? Less likely. We're in the early stages of a big bear trend. Less likely because of consecutive sell climaxes. Okay, climax here, 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 right here. So probably we'll transition into a trading range. Targets the prior lower high, right? As long as the market's making lower highs, it's in a bear channel. It officially becomes a trading range once the market gets above a prior significant lower high, like this one. Maybe this one, but this one for sure. If the market gets above that, then the bear trend will have converted into a trading range. Buyers or sellers below 9? Probably buyers below, right? But not clear, right? Trading range, nothing is ever as clear as anyone wants. And I think this is a trading range open. Okay, so do we find a lot of sellers below 9? No, looks like we found some buyers, at least bull scalpers who bought the 9 low, looking for a 1 or a 2 point scalp. 60-minute bar closes in 12 minutes, and the market will decide whether it will remain an inside bar and whether it will have a bull body or a bear body. It opened with bar 1, so the open of the 60-minute bar is right here, and if bar 12 closes above that red line, then the 60-minute bar will have a bull body. Though we still have a couple of bars left, and if it closes obviously new low of the day, then the 60-minute bar will be a strong bear bar. It looks like most of the bulls took profits at 2 points, so no conviction. They're just looking for a scalp, maybe waiting for a better looking bottom. So if you're a bear, you're happy with 10, but since the trading range is likely, you'll probably be unhappy with 11, right? Trading range disappoints traders. 3 good bull bars, disappointing 4. Bears are happy, 4, 5, 6, disappointing 7. Bulls are happy, 7, 8, 9, disappointing 10. Right now the market is deciding on the appearance of the 60-minute bar. So far an inside bar. The bears would like it to close on its low. At a minimum, the bulls would like to put a big tail on the bottom of the bar. Nothing has changed, I still think, after consecutive sell climaxes over the past 3 days. Today will probably be a trading range day. Remember, bar 12 might close above the open of bar 1, creating a bull body on the 60-minute chart. Swing bulls are still on their long above 7 for a possible low today. Swing bears are still on their short